Cathie Wood, many will lose everything. Cathie Wood, an American investor who specializes in stock selection, is the founder, CEO, and CIO of ARK Invest, a firm that manages investments in cutting-edge technologies, including self-driving vehicles and genomics. Recently, Cathie Wood sees that a recession is on the horizon, with inventories piling up across the ecosystem and the Federal Reserve's attempts to battle inflation through rate increases. According to Wood, it's only a matter of time before another economic crash occurs, although this recession is different from what happened in 2008 and 2009. In this video, Wood identifies some key inflection points that have led to downturns and how an inventory recession and drag on the world's economy will further worsen the US economy. Hello, and welcome to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. Before we start, make sure to leave a like, subscribe, and comment below if you enjoyed watching this video, and turn on the notification bell to keep posted. And now, without further ado, let's start! The bad news is that the Fed has become highly aggressive and hawkish, but the good news is that we are beginning to collect evidence that confirms that a recession is taking place in the US economy. This is what Cathie Wood, the Chief Executive Officer of ARK Invest, had to say regarding the hawkishness of the Federal Reserve in its battle against inflation, with interest rate hikes and the impending downturn in 2023. Wood believes that the idea that everyone should be concerned about inflation right now is actually an incorrect way of looking at the world, since the United States is receiving a lot of evidence suggesting prices are coming down. Many believe the idea that deflation poses a far greater threat, and this viewpoint has been challenged by those who are certain that the global economy has entered a situation similar to the one that occurred in the 1970s. But Wood believes that the pricing action, which includes not just the prices of stocks and bonds, but also the prices of commodities such as cryptocurrencies and maybe even housing prices, will be the primary factor in driving the increasing probability of deflation. Yet, as Wood pointed out, deflation may be a very positive thing if it is brought about by technological advancement and other forms of growth. Still, at the moment, the United States is experiencing a severe deflation, and its people will have to persevere through this difficult time. Wood continued by saying that there won't be much growth this year and that a recession will present another set of challenges. In addition, according to Wood, the cryptocurrency market saw its worst quarter since 2011, despite the fact that it is now a far more mature industry than it was when the boom-bust cycle unfolded. In contrast, the stock market had not had a worse year-to-date performance since 1962, when the Cuban Missile Crisis happened, as the S&P is down 20% and the Nasdaq is down almost 30%. On the other hand, as per Wood, the performance of bonds so far this year has been the worst it has been for anyone's lifetime since 1788, which is more than 250 years ago. Nonetheless, even though the market has been exceedingly challenging for investors, Wood believes that there is hope on the horizon. The glimmer of hope is the fact that the Fed is receiving a lot of signals that will, in the end, be manifested in the lagging indicators known as the PPI and the CPI. Wood predicts that many businesses will signal in their quarterly earning reports that a recession is underway, adding to the pile of data the Fed is receiving. Now that they are responsible for both employment and prices as part of their mandate, the Federal Reserve seems to be concentrating almost exclusively on prices. Even though Wood is delighted that the Federal Reserve is now focused on a pricing rule, Wood asserts that the cause for the pivot is going to be a significant level of deflation spreading across the system. If you look at the prices of various commodities, such as the price of gold, you'll notice that it reached its all-time high in August 2020 and is now at the lower end of a 2-year range. At the same time, the prices of copper and oil are falling, and the prices of lumber and iron ore have both plummeted. Wood claims that the United States is experiencing deflation because international freight prices indicate that supply chains are becoming much more loose, leading to lower rates. Right now, we are also observing a significant overhang of inventories all across the world, as the economies of Europe and China are practically in a recession. Retail stores in the United States are suffering under the weight of excess inventory that will need to be cleared out with price reductions. As a result, Wood believes that the United States will have some substantial surprises in terms of inflation over the next 3 to 6 months. On the other hand, the Federal Reserve is evaluating the PCE deflator, which reached its highest point in February at 5.3% and has since decreased to its current level of 4.6%. According to Wood, the United States has experienced experienced negative figures and will see even more negative numbers in the next 3 to 6 months. In addition, Wood argues that if the United States has a sufficient number of sequential declines, the Federal Reserve will shift its tone quite dramatically. The Fed will take note of the string of figures, many of which will be negative, and likely urge a change in policy. Additionally, Wood thinks that unless some of these cost reductions are implemented and inventories are sold off, there's going to be a significant amount of stress placed on profitability. Meanwhile, Wood has made it abundantly clear that, in her perspective, the crisis that the United States is currently facing will in no way be comparable to the one that occurred in 2008 or 2009. She feels that the recession is primarily the result of an inventory recession and a drag from the rest of the globe. There is widespread disagreement that the globe is now experiencing a recession, but many experts are predicting that we will enter one within the following year. However, Wood is optimistic that market conditions will improve as we move forward this year. Yet Wood contends that there has been labor hoarding, and although the employment figures have appeared high, the underbelly of employment is not actually strong, with household employment practically stagnant over the last 4 or 5 months, which includes a large number of different types of small businesses. Nevertheless, according to Wood, the labor shortage is causing businesses to hoard workers since they are unable to hire new employees due to the supply shock and the COVID-19 pandemic. Fears associated with inflation and increasing interest rates have been a significant impediment to growth strategies across the globe, including those of the United States. But Wood is hopeful that the situation will improve in the near future. On the other hand, in the global public equities markets, truly disruptive innovation, which is the only thing that the United States focuses on, is valued at around $8 trillion as of today. According to Wood's prediction, this sum is projected to rise to more than $200 trillion in the next 8 to 10 years. As a result, its share of the global public equities market is expected to increase from less than 10% to what Wood predicts would be 60%. Wood is confident that it will get to that level because she believes that such platforms are going to shake up the existing order of the globe in a way that the world has never seen before. If Wood and her company, ARK Invest, are correct about what is going on in the economy and that inflation is going to come down rather drastically, then this will be a positive indicator for growth stocks. After a significant price decline, ARK Invest has acquired a large number of equities trading at or near their intrinsic value. Meanwhile, given that the 2-year Treasury and the market itself have priced in at least 4 interest rate increases, this possibility, according to Wood, is increasingly priced in the equities markets as well. And if anything, rising oil costs represent an extremely burdensome tax on the socioeconomic and demographic segments of the economy that are already struggling the most. As a result, Wood believes that the worries associated with the looming crisis will transition away from the possibility of increased interest rates and inflation to the prospect of a recession, since we are seeing inventories pile up across the ecosystem. Hi! We hope that watching this video was interesting and that you learned something valuable. If you enjoyed it, please hit the notification button, like, subscribe, and watch more of our videos. Also, don't forget to share your comments in the comment section below. This is Finance Sense, helping you stay current on all the most recent changes in the financial markets and the economy. Stay safe and look out for the next video.